Hello all dear friends, welcome to the Binary Wins channel. I'm with you with the 20th part of the Candlestick Psychology video series. In this part, I want to teach you how to identify an area on the chart so that you can enter the trade in that area with more confidence and security. So let's move on to today's video. Okay, if you remember, I already talked about this point that always try to identify the direction of the trend first and use the tips and patterns taught in the channel to trade in the direction of the trend. Because in uptrends, at least 70% of the volume and momentum is in the hands of buyers. And in downtrends, it is in the hands of sellers. That is, when you move with a trend, you're actually moving with 70% of the market share. And this increases your win rate and your chances of success in trading. Today, after identifying the trend, I want to introduce the ranges that are associated with our trend. And in fact, trading in these ranges will have a higher chance of success, which is why these ranges are called golden areas. But what is the golden area, and how should we enter the trade by identifying these ranges? First, I want to address the golden area in upward trends. Bullish golden area. When we have confirmation of the upward trend, and after that, our minor trend and major trend combine and become one, a so-called bullish golden area is formed for us. Now we'll explain more about the figure. Suppose we have an upward trend. We found confirmations of the trend. Low, high, higher low, higher high. And then our retracement trend reaches a support level. And the minor upward trend is formed for us again. This minor bullish trend, which is formed after the confirmations of the trend, and is actually in the same direction as our trend, is called the bullish golden area. That is, it can go from this support level to our resistance. This is our major bullish trend. This is our minor bullish trend. If you look closely, the major and minor trends have merged into one. That is why this area is called the bullish golden area. Now, how should we trade using the identification of this area? Suppose we found an uptrend. We got the confirmations of the trend. Our retracement trend has reached the level. This is our support. And this is our resistance. The point is that in the bullish golden trend, after the first green candle is formed, we can join the buyers and go to the resistance level. What does it mean? That is, when the first green candle is formed for us, we can enter a buy position on the next candle. Pay special attention it is better if the green candle forms a powerful reversal pattern, such as a bullish engulfing pattern, like a morning star, like TRC, and other powerful reversal patterns that I explained to you. And probably this minor trend that has started will continue its movement and will go to the next level. See, the major trend and the minor trend have become one. That is why this area is called the bullish golden area. But the next important area is the bearish golden area. In fact, the opposite of the previous one. When we have a confirmation of a downward trend and our minor trend and major trend combine and become one, a so-called bearish golden area has been formed for us. Suppose we have a downward trend. We found confirmations of the trend. After that, the trend retracement has reached the resistance level. And the trend that is formed between these two levels, after the confirmation of the trend, is the bearish golden area. This is major downtrend, and this is minor downtrend. That is why this area is called the bearish golden area. Again, if I want to explain it to you in the figure, suppose we have a downtrend. We found confirmations of the trend, then our retracement trend has reached a level. And here too, we are waiting for the first red candle to form to enter the trade. In the bearish golden area, after the first red candle is formed, we can join the sellers and enter a sell trade on the next candle. And there is a possibility that this downward minor movement will continue to the next level. The major downtrend and the minor downtrend. That is why this area is called the bearish golden area. Note that if there was a level in the path of this minor trend in the golden area, it is most likely that the candles will cross the level and pass through it. But if we had a level, we wait to use the level to trade in the direction of the minor and major trends. That is, it is better to enter the trade with a pullback in the same direction as the minor and major trend in the golden area. Okay, let's go to the chart. I will find some examples and show you to make it clearer for you. For example, look at this trend. As you can see, we have a downtrend. We found confirmations of the trend high, low, lower high, and lower low. After the formation of the first red candle, we could enter a sell trade and join the sellers. This area is the bearish golden area. And again, if you look closely, the downtrend continues. And again, in the golden area, after seeing the first red candle, we could enter a sell trade and join the sellers to the next level. This area is, again, a bearish golden area. Look, we have a downtrend. And after the formation of the red candle, I entered a sell position on the next candle. In fact, I traded in the golden area. My trade was placed lower just because of the fast momentum. Okay, let me find you another example. Look here again. Downtrend, red candle, and then a sell trade on the next candle. If you look here, we still have a downtrend. This is our trend retracement. After the first red candle formed, we entered a sell trade on the next candle. This is our golden area. Let me find an example of a bullish golden area. If you look closely, we have an uptrend. This is the golden area. I entered a higher trade after the green candle formed. No problem, I'll find another position. Look at this example. Downtrend. We have confirmations of the trend. and after the first red candle formed, we entered a sell position in the same direction as the major and minor trend. Let's wait for the position to close. Great, these are the positions we took using the golden area. Very well, dear ones, do not forget to watch the Candlestick Psychology training videos and trading videos with Candlestick Psychology tips completely and several times. And then try to practice and trade on the tips in the broker. Candlestick Psychology is the science of analyzing candlestick behavior. In Candlestick Psychology, you learn the language of candles and understand how to talk to candles. You analyze the cause of their behavior and predict the future of this behavior. Like a professional musician who, when he sees any melody or lyrics, easily starts playing, and if the melody is taken away from him, he can guess the continuation of the song with his own knowledge and intuition and play the continuation of the song in harmony with that melody. If you liked the video, be sure to like it, subscribe to the channel, and send the channel link to those who are interested in working in this market. To register with the PocketOption broker, use the registration link below the video and receive a 50 to 100% bonus to start practicing and trading. Don't forget that you are the best. Take care of yourself until the next video. Bye!